Hello everyone, my greetings to one and all. This is the 24th session on national income estimation. In the previous session, you have learned about the components of expenditure method. I am Poonam Vohra from Macroeconomics Learning Center. This session focuses on the steps involved in estimating national income by expenditure method. So let us understand these steps. While estimating national income by expenditure method, following steps needs to be taken into account. First is identify the economic units incurring final expenditures by household sector, government sector, producing sector and rest of the world sector. Then classify final expenditures into private final consumption expenditure, government final consumption expenditure, gross domestic capital formation and net exports to get GDP at market price. Now one has to find domestic income, which is NDP at factor cost. So one needs to then deduct depreciation and net indirect taxes from GDP at market price to get NDP at factor cost. Then one needs to estimate net factor income earned from abroad and add it to NDP at factor cost to get NNP at factor cost or national income. In an equation form, GDP at market price by expenditure method would include private final consumption expenditure plus government final consumption expenditure plus gross capital formation plus change in stocks plus net exports. From GDP at market price, one has to find NDP at factor cost, which is domestic income. Hence, GDP at market price minus depreciation minus net indirect taxes. One gets domestic income, and to domestic income, net factor income earned from abroad gets added to get national income or NNP at factor cost. While estimating national income by expenditure method, one has to take certain precautions. That is, expenditure on intermediate goods will not be included as final goods are only taken into account. Such expenditure would lead to double counting. Expenditure on transfer payments need not be included as these are unilateral in nature and there is no productive service involved. Purchase of second-hand goods are also not included because expenditure is incurred on these goods in the year they were manufactured. Expenditure incurred on purchase of financial assets are also not included as they do not directly affect the flow of goods and services produced. Last but not the least, expenditure on own account production will be included as it is possible to ascertain its market value. Keeping these aspects in mind, it becomes easy to estimate national income by expenditure method. Now assess yourself and pick up the correct answer for the question as given. The question is, which of the following would increase the level of national income? Option A, an increase in taxation. B, a reduction in government spending. C, a reduction in consumer spending. And D, an increase in exports. Please check your answer. The correct answer is option D. It is only an increase in exports that will increase the income of the nation. Rest options given will reduce the income. So option D is correct. I hope you have understood the steps involved in estimating national income by expenditure method. With this, the session comes to an end. The next session would focus on few numericals based on expenditure method. Till then, keep reading, keep learning, and keep practicing.